look, we see things happening in the gold and silver market now that we've never seen before. And I think it's something that we should be very cognizant of. The basic premise is that central banks and institutions and, I don't know, family offices, sovereign wealth funds, they're more concerned now about amassing real physical bullion than anything else. And the target of all of this seems to be the LBMA more than anything. We've talked at length about how the LBMA has, in essence, a float, and has had a float that's been relatively stable in silver for quite some time, of about 290 million ounces, that is trading off of roughly 2.9 billion ounces per day of paper trading, or 3.5 times the annual global mine supply, or 10 times the amount of silver behind it. In other words, the paper to physical is 90% paper to physical. That's what the Hunt brothers saw in 1980. More paper, less physical, and so they exploited it. Well, since November, when the U.S. has become a net importer of gold, quietly the same thing is happening with silver. It hasn't really been publicized quite as much, but we saw over 70 million ounces of silver leave the LBMA in January. That's an all-time monthly record, or about 20% of the float. There's only about 270 million ounces that remain that are not encumbered. So in other words, there's about 780 million ounces total, of which only 270 of those million ounces, 270 million ounces of the just under 800 million are available. The rest are encumbered, belong to ETFs or the Bank of England or who knows who. But the bottom line is that we're seeing silver come into the United States. In January, 2,586 tons have come in that we know of, which dwarfs for any single month, any month that I can ever remember seeing, at least in a very, very, very long time. And so whether we're talking about gold coming in or silver coming in, it's really the epicenter of all this is in London, and London's in trouble. Everyone's talking about how they were a T+1 settlement that's now gone to T+, 60, T+90. They're taking an inordinate amount of time to deliver the metal that they are required to be able to do so in just a matter of a couple of days. And everyone's been focusing on gold, but it's very important to realize that this is happening with silver as well. And so, we've seen a lot of the unwinding, or you will, the hedging of the positions, covering of the positions that are naked here with all the gold coming in. Perhaps that's why we've seen gold go up so much over the last several months, is that the American bullion banks were aware of what was coming. The European banks are still very much exposed. I don't think they've even begun to do this with silver yet. So all of those people waiting for that moonshot in silver, waiting for silver to catch up to gold's performance, maybe we're right there. Because with the Basel III implementation coming into effect, which really is about gold, I think they're kind of trying to shore up their books across the board, realizing that being naked short in an environment where the world is accumulating physical, where the world has lost trust, is really very dangerous as a mud wall. And I think that's something that is being recognized by the banks here in the U.S. As much as I almost choke on saying that, maybe they realize that this is an existential threat. And if they are going to let anyone fall on the sword, it looks like it will be those European banks that are part of the LBMA. This is getting very serious very quickly. And, to see the largest withdrawal ever out of the LBMA is something that people should stand up and take notice of. There's a rumor, and I can't substantiate it, but since we're talking rumors, let's talk rumors. The rumor is that, yes, that is what he's trying to do. Started with Powell, and the rumor is even that they're in cahoots, Powell and Trump, even though they don't appear to be. And it started with Powell changing the interest rate structure from LIBOR to SOFR. And that was a shot across the bow. The rumor is that it's the aristocrats, from the old European aristocrats, that are responsible for like the color revolution that we're seeing here, or that we saw over the last 4 years. They call it a color revolution. You could argue it is. I mean, the stuff that we saw so far departed from, you know, the American ideals that Trump is trying to restore, that they were actually behind any election in loss of integrity. I don't want to say that the election was rigged in 2016, although it had certainly the hallmarks of it not being fair. The bottom line is he believes it was, and that they are behind it. And this is how he's getting back at them. And that the rumor is that the banks here in the U.S. have gone long and the banks over there are massively short. And it's a scramble. It's an existential threat. Will bring down, could very well bring down the Bank of England, could very well bring down some of those institutions. That is a rumor, and I've heard it. And I guess to a degree, you know, if someone has to fall on the sword for all of this, I think he probably said, look, you're beginning to see this right now. The comment out of Deutsche Bank, let me just read you this comment out of Deutsche Bank, global head of FX strategy, Forex strategy, in a note to his clients. He says the US dollar may lose its traditional safe haven status as global markets adjust to a new geopolitical order, according to Deutsche Bank AG. We do not write this lightly, but the speed and scale of global shifts is so rapid, needs to be acknowledged. He goes down to say, and this is kind of what it's getting at, you know, you notice that they say, we don't need the American protection anymore, we'll do it ourselves. Well, two pillars of America's role in the world are being fundamentally challenged: the US security backstop for Europe and the respect of rules-based free trade. It appears as though that actually could be a possibility. But yeah, I mean, if you see a failure to deliver on the LBMA, I mean, look, you could argue we're already seeing that. I don't care what they say. If it's a T+1 and they say there's a shortage of trucks and manpower, when they've already delivered billions and billions and billions worth of gold before they figured out what was happening, I would argue they figured out what's happening. Originally, it was the Trump tariffs and the exchanging of exchange for physical, which is something that's happening all the time. And then it's like, wait a second, this is much deeper than that. It could be a pushback and an attempt to blow up the Bank of England. I'm not saying it is, but there are prevailing rumors that suggest that. The LBMA is not an exchange. It's a peer-to-peer platform. And when we exchange certificates, or when I buy when one goes long, one goes short, the party that is long has absolutely the right to stand for delivery, and they are all delivery obligations. It's that most of them never really, not all of them, many of them would be cash settled. But yeah, it's different than it's an actual failure. And then the ramifications of that, it doesn't maybe not really blow up the exchange in and of itself, but the fear of that being systemic would blow up the exchange. So it would certainly blow up the reputation of one of the biggest commercial banks in the world, whichever one that is, Deutsche Bank or Standard Chartered or UBS or whatever it is. So yes, it's a problem. On COMEX, it's an exchange, and so there is force majeure cash settlements built into it. To my understanding, I believe I'm right on this, that's not part of the deal on the LBMA. You make a deal is a deal. Just like, you know, you would expect peer-to-peer, there's no one to step in and cash settle, no exchange to come in and cash settle. We have nine Brinks vaults around North America, as you know, Dunnigan, and one of them is in New York City, JFK. It's the only one of our Brinks vaults that is a COMEX registered vault. The bid prices on the 1,000-ounce bars are higher than I can really maybe even at any time remember, or they have been. I haven't checked them today, but they've been elevated, much higher than they were when times were normal. Because there is a shortage of those bars. Those bars are becoming harder and harder to get. And, you know, you wouldn't know this because the retail side of things has been muted and well evidenced. Premiums haven't spiked again, although starting to climb a little bit on the Eagles. You know, there are companies out there that are selling maples much higher than Eagles right now because of the tariffs. We were able to stock up on them leading up to it, but there is a tariff in place on silver maples as well. The point of it is that on those bars, there is a shortage. The banks who are naked short, these traders who are naked short on COMEX, the term rehypothecation, are nervous that what always was a cash settle is now turning into, I don't trust it, I want the real thing, thank you very much. And they're scrambling to get it. Otherwise, they will be forced to cover at some point into a rising market, which is a very dangerous thing. So I've always said something that people just probably went one ear and out the other, and that is you can only successfully manipulate a market for extended period of time by pushing in the direction it's going. Well, that's true. When no one stands for delivery, you can be Bernie Madoff and you can run a fractional system that is massively rehypothecated. That is in essence a Ponzi scheme. But wait, when people say, Bernie, I need my money, well, then there's a problem. And that's kind of what is being said across the board. Now, I don't know how the COMEX figures into all of this. Is the COMEX being restocked? Is it a safe haven all of a sudden because of, if we believe that rumor and they're draining everything, I mean, right now you could argue that the COMEX has become the largest delivery hub on the planet. Never was that, but it is outpacing other places. We're seeing massive deliveries on COMEX, deliveries we've never seen before. Now, remember, there's a difference between delivery and offtake. Delivery means it was delivered to my account and it is eligible, but it's not registered. Registered means it's for sale. Eligible means it's in my account. It is eligible to be placed into registered, but it's not. So I don't know exactly how much we've seen taken off the exchange, which would be prudent for those industrials that don't want to mess with anything. But I can tell you this gal, who's a very shrewd lady, an investor, has concerns. So if she does that mean, we'll start seeing more people and more institutions start feeling the same way, not trusting even the COMEX? I'll take my bars and hold them myself because I need it for my industrial applications, maybe. But the real reason that they're not selling them is that they are scarce. Now, this will trickle down into this market. See, everyone's choking and has been for a while on inventory. And all of a sudden that inventory will be gone just like that. And it happens every time. This is far more extreme than anything I've seen. And many of the dealers haven't reloaded. And if you can't buy maples because of the high tariffs, you've just cut off, 20% of the available sovereign product. And things can get real interesting real quick on the retail level. I'm not saying they're going to. I expect them to. They haven't yet. But if it's that hard to get and you're seeing that kind of stress on the COMEX and the LBMA, it has to, by extension, filter down into the retail market and the availability of product and the availability of the mints and the refineries to make product easily and inexpensively. So I guess only time will tell, but I would expect to see that slowly and then all at once transition to retail.